Alright folks, welcome to Chapter 6, Execution and Trade Management. Back to the backbone of trading, and this is the holy grail of trading. Understanding this picture right here. If you understand this picture, then you shall succeed. If you truly understand this picture, then you're going to make it. RR versus technical edge. So risk to reward and risk management, the percentage gain or loss per trade versus technical edge. And technical edge, of course, being turtle soup and CRT, right? This is all you should see. You don't see anything else. Many of you, right, I suspect, are following 10s and 20s and some of you, I don't know how you do it, but you follow 1,000 people, right? That's a distraction. You're distracting yourself. If you have 10 different people telling you 10 different pieces of information, right? You have 10 different sources of information whispering in your ear. Kind of similar, but different things, right? It's impossible that you find 10 educators, right? 10 trainers, 10 in any field of life, especially in trading, right? It's impossible to find 10 sources telling you the exact same thing because they have unique experiences. Some have more, some have less, right? So even if you take the top 10 traders in the world, right, and you use them as your mentors, all 10, you're going to fail. You need to pick one and focus on one. You joined UTS, right? And being part of UTS should be a badge of honor to you, right? Being part of the University of Turtle Soup. And the fruits of your labor, the best students will prevail in a couple of weeks to a couple of months, right? And you will make this name proud. That's your mission. That's your job, right? Live up to the name of UTS. You joined this to learn turtle soup, right? And CRT. They go hand in hand. It's not two separate things. It's not a new shiny object. It's always been there, CRT and turtle soup. There is no reason for you to go on strategy hop. If you do, right, which some of you inevitably will, then you're going to fail. Right? You're a failure. And you need to hear that to wake up to what you're doing. You're damaging your chances at success by focusing on more than one teacher, by listening to more than one source of information, whether passively or actively. Be deliberate in the action of grabbing your attention and controlling your attention, which is difficult in the age of social media, right? But grab your attention, control it, and especially when it comes to receiving knowledge, limit your sources of information. I've trained and mentored many successful students along the past year. And if you measure success by money, then hundreds and hundreds of thousands of dollars. By accuracy, extremely high accuracy. Right? By life-changing stories, I can pull up hundreds, if not thousands, of life-changing stories, from rags to riches. Right? Not even me, apart from mine. Right? My students, my disciples, and I'm proud of you if you're one of them. But upon analyzing them, I realized that the most successful and the most favorable outcome goes to those who focus only on me. Is it because it's me? Perhaps. But the fact that they're focusing on one person only, that eliminates 90% of the distractions that are hindering your progress. Right? And I know some of you are going to skip this part and say, give us the sauce. This is the sauce. This is the important stuff. Right? Stop trying to get information from multiple sources. You chose one credible source, one verified credible source. Now stick to it. Right? The edge is turtle soup. If you try and trade anything else, then you're a fool, because everything else happens because of turtle soup. Right? Excuse my sharp tone, but this is an important topic. Right? This is turtle soup. Whatever you trade is going to happen because of turtle soup anyway. Right? So the edge is turtle soup and CRT. From one source, which is me, the author. Now, which one matters? It's a funny ending to that rant. Which one matters more? Technical edge or RR? The answer is RR. Technical edge is irrelevant. It's important, obviously, but if you have to pick one of these in terms of importance, then this trumps this every single time. The percentage gain versus loss per trade and the risk to reward trumps the technical edge every single time. Which is why you find shit analysts who make money and good analysts who don't. How does that happen? Excuse me. Now, technical edge is irrelevant. If you have someone who has a 90% win rate, right? So out of each 10 trades, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And if you zoned out during the rant, then snap back into it, right? Focus. If you have someone with 90% accuracy, so trade number 1, win. 2, 3, 4, 5, 6, 7, 8, 9, 10, all wins up until 9. And then on trade number 10, he over-leverages, or they over-leverage. You got some ladies in here too. And they blow the account. That indicates to you that the edge is irrelevant, because you have an edge. You have a 90%, and that is arguably the best edge there is in the world, the highest performing edge in the world, and you still blow your account. Why? Because you lack risk management. RR, right? So risk to reward has to be positive, and percentage gain versus loss per trade is all that matters. Risk management will grow your account. Risk management will preserve your profits. Here's a generic risk to reward and win rate cheat sheet. So I lied. The edge is sort of irrelevant, but it's less important to risk to reward, which is paramount. If you have an edge which gives you 1-to-1, so for every dollar you lose, you make $1. Risk to reward, right? Which is terrible, by the way. As turtle soup traders, you at least go for 1-to-3, right? But if you have 1-to-1 and it's quite ugly, go and map out a 1-to-1 right now and see how unattractive it is. Even that, if you have a 1-to-1 and you win only 60% of your trades, right? So out of every 10 trades, you win 6, then you make money. All right, so trade 1, win, 2, 3, 4, 5, 6 wins, and then 4 losses in a row. You're going to make money. If your edge gives you 1-to-2, then if you have a 40% win rate, you make money. What does that mean? That means if you have 10 trades and a 1-to-2, then Excuse me. Trade number 1, win. Number 2, win. Trade number 3, win. Trade number 4, win. And then 5, 6, 7, 8, 9, 10 are all losses. You will still make money. If your risk to reward is 1 to 3, so for every dollar you lose, you make $3, then you only need 30% win rate to make money. 30%, which is horrendous. But you'll still make money. Right? This table right here, this generic Google Images table, is the secret. It's not in the details and intricacies. It's cool to have 80% accuracy, right? But this should give you closure. This should give you a sense of relaxation, you know? So, trade number 1, win. Trade number 2, win. Trade number 3, win. And then 7 trades all losing, you still make money. If you have a fixed 1 to 3, right? And trade 1 to 4, obviously. 30%, 1 to 5, 20%. Right, so if you look at this, you're going to ask yourself, why then, if it's so easy, then why do most traders lose money? Because they lack the discipline to wait for good setups. Write that down. And it's probably the reason most of you lose. Right? Most of your losses come from the lack of ability to wait for good setups. Your aim is 1 to 3 with a 50% win rate. Right? So win 1, lose 1 to start with. If you have that, then you're going to make more money than 90% of traders alive right now. Right? 1 to 3 and 50%. If I ask you right now, do you know your win rate? You don't know. If I ask you, what's your average risk reward? You don't know, right? You're simply, it's most likely that you're simply, you press buy, you press sell. You see an FVG, you sell. You see a breaker, you buy, right? Sounds familiar? If it does, then I'm not surprised, because that's what most people do, right? Mindlessly press the buttons. No, think, stop, frame out a plan, right? And execute based on that plan. And there's a plan coming at the end of this chapter. But as soon as you enter the markets, all you're looking for is a 1 to 3 and a 50% win rate. Boom. Profitable. I never thought I'd use that word. Boom. There you go. But that's what you look for. All right. 1 to 3, 50%. Yes, mine is higher, obviously. 80% publicly, 90% privately. Right? But aim for this. 1 to 3, 50%. It's super easy. You can do this. You can achieve this with an RSI strategy. Right? So focus on the amount of R's you produce. And by the way, next up is the percentage gain versus loss, right? Now, percentage gain and account size. If you have an account, and this is not going to be popular, if you have an account below $10,000, then just don't bother. All right, forget about trading. Yes, you've been fed on social media, especially from the African Twitter, right? $1 to $10,000, right? $100 to $100,000. It's a bunch of crap. And the people who do that, I've spoken to them, right? I know them. hey, you know what? I grew this account from $1,000 to $25,000 and then blew it up the next day. It's very common because with high risk comes high reward, but there's still high risk, right? This is not sustainable. The idea of explosive account growth. Yes, you can do that. Yes, I will dedicate a specific chapter to that inside of the group chat, right? Along with 2 special models. But your mindset should be set on this: a small percentage gain per month. Excuse me. Aim for 6% per month, right? If you get 6% per month, and you might laugh at it right now because you've been polluted by social media of the dreams of gaining 100% per day. But if you get 6% per month, that's around 70% per year, then you're outperforming every single hedge fund there's, every single bank, every single institution, every single fund. You're outperforming everyone, right? Because most traders, at the end of the year, they're net negative. Right, 6% per month. Pretty simple, right? Very simple. But the hard thing is stopping yourself. You want more. You want more. You want more. You want more. You keep wanting more until you lose everything you made before, right? And that's the nature of the game. The market gives, and the market takes, and the market always makes sure to give you the taste of profits, the taste of quick money, just to sucker you in a bit more, and then grab it all. It's like a kidnapper, right? That's a strange analogy. It's like a kidnapper luring in a child into a van with a lollipop. Right, so you're the child. The market is a kidnapper. And it's going to take you into the van of loss, luring you in with a couple of wins. Here's 1, here's 2, here's 3, and boom. Account blown. How do you avoid that? By controlling your risk. When you start losing, right? Get rid of losers quick. If you're bleeding from your wrist, do you watch until your entire body is drained of blood and you say, oh, I'm dead now? No, you don't. As soon as you start bleeding, you locate the point where the blood is coming out from, and you apply pressure and stop it, right? So when your account starts bleeding, stop it as soon as you can. Cut losers quickly, and let winners run. $10,000. You can go, if you have less, and you have nothing else to work with, then sure. Then use every 4 hours as a monthly candle, right? And use this as your aim per 4-hour candle. $10,000, 6%, 0.5 to 1% per trade. You never ever, under no circumstance, do you risk more than 0.5% to 1% per trade. Never. Excuse me. And with a 1, 2, 3, right, you're going to make a lot of money very easily. And when you lose, you won't lose that much, right, based on this. Into application. Let's say you have a 1 to 3 risk to reward and a 50% win rate. So trade number 1, you win 3%. Trade number 2, 6%. Trade number 3, 9%. Trade number 4, 12%. Trade number 5, 15%. Right? Because you're winning 3% per trade and risking 1%. 15% for 5 trades. If you lose the next 5 trades, you're down 5%. In total, 10%. Right? It baffles me how most people have no idea about these simple concepts. right? Simple math. Just that formula alone, by the way, is enough to pass all these prop firms, quote unquote. Now, when you tailor this risk management system into CRT and Turtle Soup, that's when the magic happens, as you'll see. Now, decrease risk in half. This is an important point. Most of you, in fact, ignore this, right? All of you just trade 1 to 3s blindly, right? 1% loss, 3% win, and trade like that. If it's stop loss, then keep going. The numbers are on your side. Don't think about the next 10 trades. Don't think about the next 100 trades. Think about the next 1,000 trades. All right? Decrease risk in half with each 3 losing trades. So 1% to 0.5%, and then 0.5% to 0.25%. And then put it back on with every 3 winning trades. All right? With max risk, the roof of risk is 1%. The minimum risk is 0.25%, right? So minimum 0.25, maximum 1%. And this stops the bleeding considerably, right? You can't lose money. What I've said in the past 10, 15, 20 minutes, not sure, with that rant, I have no idea. That was a long rant. But what I've shared so far, if you apply it, then you can't lose. It's impossible to lose money. You can't. And this is why a professional trader is very comfortable in their skin with their strategy, because they know that the numbers are on their side. It's also why the prop firms, by the way, they're also very comfortable selling you demo accounts, because they know that 90% of traders, 95% of traders are going to lose the money. All right, so it's a 95% win rate business. Might open one. Anyway, so focus on the risk per trade. Very important, especially if you're one of these prop firm, quote unquote, traders. And it's a shame to call these prop firms these online casinos, right? Because a real prop firm is something so much more serious, so much more. It's incredible, right? The difference. But you're never allowed to lose more than 1% per trade. Never. You can't. You're forbidden to lose more than 1% per trade. Analysis versus execution. Next section. Analysis is entry, target, exit. Even this basic level, most people get it wrong, right? Because they're following the wrong people. You'll find on Twitter right now, you'll watch this lecture, you'll take your notes, and then you'll go scroll Twitter. You'll see people with charts, with lines covering the entire thing. And you ask yourself, how do they see anything? Right? It's ridiculous. But step 1 is analysis, obviously. You need to perfect analysis. You need to at least practice a lot of analysis before executing, right? Don't rush. Don't look at the guys I repost, right? They're seasoned students, at least some of them, right? But don't compare yourself with anyone. Compare yourself with yourself, right? So don't be in a rush to make money. Don't be in a rush to analyze. Take your time. The markets aren't going anywhere till 2030, right? Take your time in perfecting your analysis. And if you focus, if you maintain laser focus for the next 3 months, not even 6 months, 3 months, every single day, diligently 6 hours a day, then I guarantee you, right? So if the recipe is focus on whatever I'm saying, right? Devour my content for the next 3 months, 6 hours a day. At the same time, you're focusing on one asset, predicting every daily candle, every weekly candle, right? Noting down your mistakes, trading it live with a small account, not a demo account, right? A small live account, which won't affect you, but will sting you a bit, right? And at the end of 3 months, those of you who follow what I said just now are going to be so many light years ahead of everyone else. All you have to do is listen. Now, analysis versus execution. Analysis is entry, target, stop loss. Entry, invalidation, stop loss. This is step 1. Excuse me. Let me check today. Which one is more important, analysis or execution? Well, they're both important, but an analysis without execution is fruitless. Right? Yeah, you get some views, you get some claps, you get some likes, but if you didn't make money, then what's the point? Right? So execution. Focus on execution. And they're worlds apart. Don't think because someone can analyze that he can trade. Right? It's not true. He can analyze perfectly, but perhaps he gets wrecked. Let's say you predicted this move, right? You might enter an over leverage at the high, get stopped out because of slippage, and it goes your way, right? You might exit out of fear over here at this bounce, and then it dumps, right? These are things you gain with experience, with more time at the charts, right? Nothing replaces chart time. So execution, right? You have to blend the two. Most traders suck at even analysis, right? First, master analysis, then move on to execution and blend them together. Execution. Now, what do you see? Very basic level. You see a 3-candle model, right? Candle 1, candle 2, candle 3 is probably going to trade up here, right? Or the next candles are going to trade up here. That is correct, right? Candle is a range, turtle soup, 1, 2, 3, 4. So you look for buys until the high. Now the thing is, the analyst says, wow, it worked, yay, Romeo the GOAT, mentor, legend. But the trader says, wow, it worked. How could I have taken advantage of that move? All right. You look for buys below the open of the next candles, right? So you go to the lower time frame, you frame a 1 to 3 RR entry, and you look for buys, right? Again, over here, what do you see? All right, range, accumulation, manipulation, distribution, right? Correct. Wow, it worked. Wow, that's incredible. Let me go scroll Twitter now. No. You think, how could I have milked this move? I never analyze without a stop loss. What does that mean? That means I'll say, you know what? Yeah, nice. A range high. It's probably going to go to range low from this FVG, right? So displacement, thick up-close candle that liquidated the high. This is model number 1, right? My favorite entry. Entry at the FVG, just in case they do an IFED, right? Stop loss at the high of the FVG. An FVG entry has an FVG stop loss, right? Swing high over there. 3 candles. Excuse me. So I'm relying on this swing high to hold. I'm framing a 1 to 4 to the opposing end of the range. Target 1 is here. Monitor price here with an expectation of acceleration down to the range low, right? Now, these 4 charts show the same price picture. The difference is this is analysis, and this is an analyst's mind. And this is a trader's mind. You don't think what happened. You think, how could I have milked what happened? How could I have made money from what happened? Right? You're not a chart artist. You're trying to make some money, potentially, off these charts, right? NFA. Now, the way to think about this is as follows. Every key level, now, before you enter a trade, hopefully, at this stage, you at least mark a key level, right? Because key levels are being created every single day. Every trading day, there's key levels being created. Every trading week, there's new key levels, right? The previous day's highs and lows are a forever key level, right? Previous candle high and low, forever a key level. So hopefully at least you depend on key levels, right? So the way to think about it is as follows. Every key level owes you a 1 to 3. Every CRT owes you 1 to 3. Every trade owes you a 1 to 3, right? So when I look here, I say, hey, you know what? Nice range, right? This range is probably going to go down. I'm going to try and get a 1 to 3. And if you don't like 1 to 3s, yes, I'll teach more, like 1 to 5s, perhaps even more. But 1 to 3s are enough to make an incredible trading career, right? They rack up with time. 10 trades, 100 trades, 200 trades, 1,000 trades. They rack up pretty quick. Right? So whatever your trade model is, it owes you at least a 1 to 3. Now, a touch on trade management. Your job, most of you, right? Your job is, and your mission is this, a fixed 1 to 3 RR. If you want to trade a 4-hour order block, 1 to 3. If you want to trade a daily order block, 1 to 3. Right? Keep training yourself on 1 to 3s to begin with, right? Break even is a scam. And a touch for the advanced students over here, before I go here. Pyramiding is one way to accumulate risk and reward, right? For example, turtle soup, first entry, 1 to 3. Model number 1, order block, entry number 2, usually a 1 to 4, 1 to 5. Breaker, until the closed liquidity pool, right? That's also going to be a 1 to 3. So that combined is a 3% risk per move, and at the same time, it's a 11% reward, right? Backtest that. The sequence, remember? Entry 1, turtle soup. From every high time frame key level, there's 3 entries. Entry 1, turtle soup. Entry 2, order block. Entry 3, breaker, OTE, right? Break even is a scam. I have a saying, which is your stop loss is the turtle soup, and your break even is the OTE. Right? How many times have you put a break even stop loss, and it stops you out, then moves your direction? All right, that's the psychology of the break even. Right, the break even is never supposed to be used unless there's a displacement, unless there's a breakout of a range, right? Then you go and break even, because that specific high you entered from, if you have an advanced entry, the specific high you entered from should never be traded to again, right? Excuse me. Never move your stop loss. Let the whole prediction play out. This applies to most of you, right? Fix 1 to 3. Never move the stop loss. The numbers in your favor. The numbers are in your favor, right? Note down what price does from the time you enter till the time you exit every single trade, right? This is Tom Dante's Demon Finder on eliminating mistakes, right? So per week, right? He says throughout the month, but throughout the week, check yourself on this, on these demons. I won't explain this. I'll let you read it, All right, simply the mistakes you can commit, how many times you check, how many times you made them, and if you make one specific mistake more than 8 times, then stop trading. Right? Bet too large 8 times, probably a common one. Stop trading. Study. Right? Study the losses. This is part of journaling, by the way. Right? Apart from the basic journaling, which is noting down and documenting every single trade you take, right? Forever, till you die. Because that's how professionals do it. Now, let's go ahead and touch on it. Right? Demons will destroy your edge. Learn from your mistakes, and as you know, I'm a very loud advocate of eliminating mistakes, because once you eliminate a specific mistake, right, then you'll never make it again. That's the vow you're making. For example, let's say you're used to selling below lows, right? Once you make a rule for yourself, never sell below a low, then you've freed yourself from that mistake forever. You understand? Do you understand the importance? That means you'll never lose money ever again because of that mistake. Right? And this is an important, it seems like a sub-segment because it has no slide, but this is very important, right? Every mistake you make, once you eliminate the mistake, then if you truly identify the mistake correctly and eliminate it properly, then from that moment onwards, you will never make it ever again. Now, how incredible is that? Right? You will never sell below low in your life, in your entire life, in your entire trading career, right? You will never sell below a low because of the rule you made for yourself, because you tried to eliminate mistakes. Learning from your mistakes is the only way to achieve success. I can give you turtle soup and CRT, but when you go and apply them in your charts and you make mistakes, right, and then you go and eliminate the mistakes and focus on what worked, then, and only then, will you find success, will you find profitability. Throughout the month, place a check mark in the corresponding box each time you encounter a demon. I say a week, not a month. Determine which trading demon is outpacing the rest. Eliminate that demon as quickly as possible. So I'm suspecting most of you have this one. Betting too large, obviously. Over-leveraging is one of the biggest killer accounts there is in the entire trading industry. And it's why a lot of brokers offer high leverage, right? Because they're playing on that statistic. If you suffer the same demon 8 times in a row, you should seriously consider whether trading is for you. Now, this is semi-satire. All right, everyone makes mistakes. If you make mistakes, it's okay. All right, if you don't trade as you want to trade, if you don't trade as well as you see others trading, and that's fine. We all started somewhere, but you need to be hypercritical of yourself, right? I'm not going to pat on your back and say, you know what, it's okay, keep losing. No, lose only if you can learn. Only if you're going to learn from the loss, right? If you're going to lose and repeat the loss, then that's just foolish, right? Lose, dissect the loss, and never repeat the loss ever again. If you lost money selling below a low, then you should never lose money selling below a low ever again. Fooled me once, shame on you. Fooled me twice, then I'm an idiot, right? And that concludes this chapter, folks. Watch it 1, 2, 3, 4, 5, 10 times if you have to, right? It's very important. It is the key, along with the next one. I hope you